couple of years since COVID wreaked havoc on the global economy, and already analysts are speculating about when the next recession could happen.
Yes, we are predicting a recession.
The probability is over 40%.
Strong risk of recession.
Many analysts believe the world's biggest economic superpower could suffer a downturn from next year. And as that old saying goes, when America sneezes, the world catches a cold. Russia's invasion of Ukraine and China's tough lockdowns aren't helping either. Ironically, the people responsible for looking after America's economic stability are the ones most likely to cause this next recession.
Inflation is so elevated in the US and the economy is running so hot that the Fed may think it's way behind the curve and take interest rates too high. And that could lead to a recession or a big downturn in the US economy in 2023 or even in 2024.
Borrowing costs in the US are currently near record lows, but not for long. Markets are betting the Fed will lift rates rapidly at its next few meetings and push America's benchmark rate above 3% as it desperately tries to bring inflation down. Now, share prices have been pretty volatile lately. That's because recession signals have been flashing in the bond market. Normally, you'd expect interest rates to rise over time because if you lend your money out for, say, 10 years, a longer period, you're taking on greater risk. Therefore, you demand a bigger return, even if you're lending to Uncle Sam here. It's rare for that principle to be turned on its head, for short-term rates to be higher than long-term rates. And when that happens, it sends alarm bells about a possible recession.
On average, it's about 16 months thereafter that we see a recession when we get that inversion. Now, it doesn't happen very often. It happens generally sort of once every 7 or 10 years.
It happened in 2019 and again in April this year, sending share markets into a tailspin. People were earning more from 2-year loans to the US government compared to if they lent out their cash for 10 years.
That gives investors uneasy feelings that potentially you will get this recession in the medium term or a share market correction that can be quite large, in the order of 20 to 30%.
It's a sign the market is betting the Fed will hike rates so aggressively that it triggers a recession, so they'll be forced to cut rates again to stimulate the economy. Now, here are all the times since 1980 that America has fallen into recession after the 2-year and 10-year yield curves inverted. Though that time in 2020 was a coincidence, as no one could have predicted that a pandemic would happen and cause a global meltdown. So this inverted yield curve has great predictive power in the US, and that's why investors pay close attention to it.
We've got a tremendous amount of people that wisely took out fixed rate loans at very low interest rates, sub 2%. Now, those 2-year fixed rate mortgages are going to be rolling off into much higher interest rates come second and third and fourth quarter next year. And you're going to see a margin squeeze on the household sector.
The Reserve Bank recently predicted that if it were to jack up interest rates by 2%, house prices could drop 15%. Now, a fall of that magnitude would certainly make Australians feel a lot poorer, and they would cut back on their spending drastically, which would derail the economic recovery. And that's why people reckon the Reserve Bank will go slow with its rate hikes. It's kind of like driving on these roads. If they go too fast, it's more likely to lead to a crash.